Wall Street doesn't believe in Bitcoin. So I think the problem is the view on Bitcoin is that it's NASDAQ. Okay, so I don't think it should be skyrocketing like gold yet. I think that happens when we get the printing press turned on again, which is going to have to happen. It's going to have to happen soon because we now have, as I said, the top of the global capital structure. The safest asset in the world is falling. It's falling versus other bonds around the world. This type of thing hasn't happened before.
What's going on, guys? We've got a great conversation this week with Jordi Visser. In this conversation, Jordi breaks down why the markets broke, how they broke, what's going to happen, what does it mean for your portfolio, how will the United States get out of the situation, how will China react, and what should we expect to happen with global trade, what should be the global reserve currency moving forward, how do things like Bitcoin actually play into this, artificial intelligence, and much, much more. This entire conversation goes deep into all the different rabbit holes of what's happening in the market and how it's going to impact you. And then at the end, Jordi gives us the light at the end of the tunnel. What is the optimistic view of where we are headed? So make sure you listen all the way to the end to get some good news that we can finally all hang on to. Here's my latest conversation with Jordi Visser. All right, Jordi, I thought a great place to start the conversation is this entire week has been insane. It seems like the system is just broken and people don't know why it's broken or where we go from here. So do you agree that the system is actually broken?
This week, I will literally say in something that will be out there for the rest of my life that the system officially broke this week.
Interesting.
The top of the global capital structure is U.S. bonds. And as we sit here, I've seen something that I haven't seen since my days in Brazil. So far month to date, bonds are down over 5%, so yields are up significantly. Stocks are down over 5%. And the dollar's down about 5%. So the currency, bonds, and stocks all going down in a panic way. That doesn't happen. And the last time I saw that type of thing was in emerging markets. So if this isn't the official end of the system, which again, I don't want this to sound like doom and gloomish, this is kind of what Donald Trump wanted. He wanted to break global trade. You had Keir Starmer over the weekend say globalism is dead. I believe this is the beginning of a new system. And so when you transition from an old system to a new system, this is what really happens. And the only question now is, how is the government going to make the transition? And we got more on that this week with the actions of Donald Trump on Wednesday.
So when you think about this system breaking, I think of maybe three layers of the system. There is global trade. There is the way that the bond/stock market is supposed to work and the relationship between the two of them. And then I think that there is maybe global alliances, right? And some of these have overlap. Some of them are very different. Global trade feels like every single person I've talked to in the supply chain, on the ground, everything, we are now moving to a bipolar world where you need to have a China strategy and you need to have a US strategy. And that does overlap some with these like global alliances, but it also feels like no physical infrastructure of the global supply chain. What are you doing in the United States and what are you doing in China/Southeast Asia? Is that how you see this kind of fragmentation, or is it more complex than that?
Well, I think it's more complex because you have to remember, so China's currency and the versus dollar is not moving that much. The rest of the world's moving a lot. Mm-hmm. So if you're focused only on your China, where you're buying parts, and you're not focused on Europe at this point, the dollar's falling rapidly. So if you're someone that needs to purchase things overseas, your currency is becoming, everything is changing so rapidly because of the fact that this seems to be the end of global trade the way we've seen it. I thought this was going to happen. I don't think this is going to go in the speed it is for very long because the system is breaking. When rates are going higher, and you have to remember when we sat here originally and when we all listened to the plan from Scott Bessent, the theory was, with all this global trade breaking down, changing currencies, there was a bond put. Bond yields are very close to breaking out to the upside. 30-year yields as we sit here around 5%. The high before Donald Trump came in there over the course of the last 3 years was 5.17. Mortgage rates are going to go higher. Like the whole plan of we're going to help people all throughout the country, it's not there. So I just think everyone just has to deal with the fact that we're in this point where while we figure out this system, the China-US relationship is really important. but the currency's not moving over there. So it's just the rest of the world. It's kind of like a sausage squeeze right now while the US and China figure out how to come to some terms.
So let's talk about some of the intricate details that I think people are confused by. We can start with, if the system's breaking, why is Bitcoin's price not going up? Gold was going up, but Bitcoin isn't. Does that mean Bitcoin is over? Bitcoin is not a safe haven? Bitcoin doesn't work?
I'm sure you're getting asked this question too.
Every day, nonstop. So you answer it. I'm tired of answering it.
Well, especially while gold is up 4% in the last 3 days.
Every gold bug is DMing me saying, I told you so.
Yeah. So if we go through and we talk about who steps in to buy Bitcoin in size, gold's a different story. Sovereign wealth funds already own it. It's very easy for them to go out and buy it. Countries, central banks already own it. They can go out and buy it. Hedge funds, they love to buy gold. Wall Street doesn't believe in Bitcoin. So I think the problem is the view on Bitcoin is that it's NASDAQ. Okay, so I don't think it should be skyrocketing like gold yet. I think that happens when we get the printing press turned on again, which is going to have to happen. It's going to happen soon because we now have, as I said, the top of the global capital structure. If I say one thing over and over again today, it'll probably be the top of the global capital structure. The safest asset in the world is falling. It's falling versus other bonds around the world. This type of thing hasn't happened before.
Because people are selling. That's how these things work.
Yep.
They go down because people are selling. And that is because they don't believe the bond performance will be there, or they don't believe that the U.S. exposure at a highly concentrated level is quote unquote safe anymore.
So you've got a lot of people talking about who the selling is coming from. Is it central banks? Is it the basis trade blowing up? I'm sure it's everything. The reality is it's not a safe haven anymore. And when you're sitting at 4 and change % on 10-year yields and you think debasement has to be the answer because the currency's going down, if you're a bondholder in Europe right now or a stockholder, you're not only losing on the assets, but now you're losing on the currency. So when I said stocks were down 5%, bonds were down 5%, and the dollar's down 5%. So if you hold US assets outside this country, this is a pretty historic move in terms of what's happened. And if you're in 60-40, you're losing on both sides, plus you're losing in the currency. So I think there's a combination of everything happening, which again, it fills into, is the dollar, is the US the reserve currency anymore? And does the US want that anymore? And the answer is, I think it's pretty explicit. We don't want that role anymore. We still say we want a stronger currency, but I think what's clear.
Okay, explain this, because I think people aren't going to, they're going to be a little shocked when they hear you say that. Mm-hmm. The US dollar as the global reserve currency, there are a plethora of benefits for us having that position. Why would the US not want to be the global reserve currency anymore?
Because of the negatives that they've associated with being in that position. So the Stephen Mirren piece went through the fact that we've suffered in trade. We've been carrying a trade deficit for a long, long time, way longer than was supposed to be set up on this. So everyone can debate the positives of the reserve currency and the negatives. I think we've seen the security side. He brought that up in terms of how much we're paying in terms of dollars around the world to be the police officer of the world. There's a whole bunch of things that have gone with it. I don't think for a second that when you leave, say, the government officials around the globe, that a person in Brazil doesn't still believe in the US as the place. I just don't think that a person in Indonesia, if they have to put their currency in a stable coin pegged to something, I still think dollar is going to be the reserve currency 100%. No matter what. But I do think from government officials in trade, it's no longer the reserve currency. And I think the trade deficit has been put in by the administration. And as I've said, I think there are two ways this was going to result. One was either what we're going through now. I think the more painful thing would have been a failed bond auction. I think this is the least painful of them, believe it or not, because I think there's a way to control this much better. But we have reached a point this week where, regardless of what you thought, he had to flinch on Wednesday, and rates are now higher significantly than they were then. And that was called the bond put. So I think with the reserve currency, I think the way that people think about it, the system of trade, the way we've seen it, I don't think the reserve currency exists, but for people, they still believe in America.
So if that is true, which I tend to agree is there have been irreparable damage that has been done if you believe the old system was working. If you don't, you're excited because you say we're reordering this stuff. What is the new order? right? Both from a global trade standpoint, but also there's a capital stack. If the U.S. is going to take itself out of the top, where do we go? And is there another sovereign that is at the top of the capital stack, or is it something like gold or Bitcoin?
And this is why this word that we've heard for years, it's decentralized. So I had to respond to someone early this morning when I put out a post on X about how it was a historic week for U.S. yields versus German 10-year yields and how much it had gone wider. And at the same time, with yields going higher, you have the dollar weakening. And so the post was really related to, we're entering a new world, and this new system is decentralized. And there's two forces of decentralization which are going to be the way we exchange around the globe. Bitcoin is the digital asset of the digital economy. So rather than think about the physical goods, a stat that I don't think people have fully kind of come to terms with. So I said here the first time we sat down that the problem with the policies is when you try to separate mainstream and Wall Street, it's not possible. And it's because we have a financialized economy where debt to GDP is 120% and stock market cap to GDP at the beginning of the year was 200%. Imports as a percentage of GDP are 14%. That's exactly where they were in 2007 before we started to see the debt and the stock market go higher. So the problem is we need a decentralized framework, which means China and the US, which are most of the global debt of the world, are they going to be able to come to an agreement? I'm not sure it's going to be a kumbaya agreement, but I do think the agreement will end up being that the decentralization will speed up from here because of AI and because of crypto. And
do we see decentralization accelerating means volatility will accelerate? Because I think one of the things that has been really interesting, and I think we talked about it last week, is up 20, down 20, up 20, down 20 has now become like up 10, down 10 day by day.
Yep.
Right. I mean, there's literally days where we've been down 6-7% and then turn around. Good news. We go up 7 to 10%. And then, oh, wait, that was fake news, back down. Right. I mean, it just feels like the intraday volatility is even accelerating, not just, kind of year to year.
Yeah. So here's the funny thing. And I put this in my Substack post this week so we fell 10% in 2 days, the final 2 days of last week. So I wrote a paper that was optimistic, saying the light at the end of the turbulence. And I get a bunch of people responding saying there's no way this is it. And within there, I very clearly say, when you have this kind of a move, government officials have to respond to it.
100%.
You have two choices at this point. The system is crumbling, and with the top of the global capital structure falling, everyone, not just Main Street, Wall Street, but Europe, China, everybody's in this. And so you have a choice. And every time we've had a choice where it's like, okay, we're going to let the fiat system delever in an uncontrolled manner. Okay, well, that's what the depression is. Mm-hmm. So the end result is, every time I've seen this from the beginning of my first day in 1994 trading a book, is they come in with printing every single time, because debasement is a much easier approach on this. So when the volatility picks up, that actually means we're getting close to the end, because one thing I've never seen is when the volatility picks up, it just stops. Like, it's not going back. The market has had a hard
There's
attack.
Not a dissipation of it. There's usually some sort of asymmetric up or down.
Yeah. And you start seeing governments throw things on the wall to try and stop it from happening.
All right. So that brings us to the Fed. We know CPI 2.4, everyone's celebrating. You could have known that weeks ago if you paid attention to like Trueflation. Obviously, inflation has been crashing, economic slowdown. You don't want inflation to come down because you're crashing the global economy, but also there is this element of there's a deflationary force that's at play right now. The Fed, depending on who you ask, will make decisions based on inflation crashing too low. Others will say it's an employment thing. Others will say they're just making it up as they go. Mm-hmm. The odds of an emergency cut are increasing, but I don't know if they're yet at the point where we should expect that. So other than Trump and Bessent and Lutnick and Navarro making different decisions or, different interviews, what else do you expect the government to do?
So I think a rate cut is last on the list of things that I'd expect to see. Okay. But if it gets disorderly, absolutely the case. I think they still have the ability of intervening in the bond market they're still doing quantitative tightening right now, so they could turn that into something else. They could say something liquidity-wise that just turns everything. I think people don't realize that they announced they were going to buy basically all credit in 2020. They barely bought any credit. in Silicon Valley Bank, when we were in this, like, all the deposits are going to leave the banking system. And deposits are really important to the leverage of the system. If they go into money market funds, then the leverage is just going down like a tire losing its air. So what they did is they just created a facility. And just by creating a facility, everything kind of slowed down. The problem in the treasury market that people have to realize is two things have happened that have led to this basis trade side. And I think it's important for people because they're going to read more about it. The basis trade started to come into play once Dodd-Frank and Volcker kind of prevented the banks from expanding their balance sheet. So hedge funds took in that risk. A basis trade at the end of the day, think of it as LTCM. It's an arbitrage trade. You're trying to buy cash bonds and sell futures against it where you have very little risk. So the only time you really get hurt is where cash bonds start to underperform futures and then people have to unwind the trade. The other event that occurred was after 2020. So in 2020, that's when our debt really blew up dramatically. So as a percentage of a benchmark for the bond market, so the bond market has its own benchmark just like the S&P 500. We talk about the concentration of the Mag 7 in the S&P. Well, the concentration in bond markets is now US debt. They've crowded out the private sector. There's not as much corporate debt. There's more treasury debt. So what that means is when bond funds want to outperform the market, they use futures to represent their treasury. It gives them more leverage. They can go buy some credit and some higher yielding things. And so you end up with this push from the bond funds keeping futures above fair value. And then the hedge funds come in to buy cash bonds underneath it. The reason that's important is when you get this much volatility, two things happen. One is it gets harder to hold the trade. But the other thing that has happened, and I think this is what always goes on that people don't realize, we were at peak gross leverage at the end of last year on the optimism of the new government coming in. Not only has vol gone higher, but liquidity is non-existent. And so when you have people with a lot of positions, no liquidity, and a lot of vol, every day they're forcing them out of their positions, but there's no way to get out. So someone's always getting tapped on the shoulder. And as the Bank of England put out in their financial stability report this week, prime brokers are talking about extreme margin calls that have happened. And everyone's looking for the hedge fund. It's not a hedge fund. It's just this constant domino thing, just like the subprime turned eventually into Bear Stearns and Lehman.
Retail was buying, like I think middle of last week, which was pretty interesting to me because it almost seems like they timed the bottom or close to it. Now it helps if the president of the United States puts out an all call and says, good time to buy, and 3 hours later decides that he's going to let the market rip. But I think it was the Friday before that, there was very heavy buying from retail. The smart money, are they too smart? Like, are the institutions, like, they're overthinking it, they're looking at data, they're doing all this stuff, and retail, who historically, I think Wall Street kind of looks down on and says, hey, like, they're not that smart, that they're very undisciplined, they don't have the data, whatever. Do they actually know something that Wall Street doesn't, which is the market's going to go up forever, and so buy the dip? Like, it does feel like that is their, that's the vibe, right? Is like, oh, big drop, buy.
Yep.
Whereas Wall Street they're trying to time the bottom, they're unlevering, they have a lot more complexity they're dealing with in the bad times.
Yep.
And so it's harder for them to actually act when there's like blood in the streets. Today's episode is brought to you by Core. You can earn yield on your Bitcoin by just holding your Bitcoin. It's simple. Core, the leading Bitcoin scaling solution, will reward you for not selling your Bitcoin. It's not magic. Here's how it works. Core is a protocol secured by elected validators. You can help elect validators and secure the network by simply locking up your Bitcoin on the Bitcoin blockchain. No bridging, no lending, and just holding. When your validator secures Core, it earns rewards fueled by network activity and passes them back to you as yield. With a minimum lockup of just 1 day, when the time lock ends, you get your Bitcoin back untouched. Still your keys, still your coins, now your yield. For even higher rates, stake Core alongside your Bitcoin and multiply your yield. And if you want to see what your Bitcoin is securing, join millions of others in exploring the largest Bitcoin DeFi ecosystem. There are over 100 live apps in the network and the deepest liquidity in all of Bitcoin DeFi. Get off zero and start earning yield on even just 1% of your Bitcoin by going to stake.coredao.org/pomp. Again, that's stake.coredao.org/pomp, or go click the link in the description. Today's episode is brought to you by Polkadot. Polkadot offers secure, scalable, and decentralized blockchain technology that perfectly aligns with the needs of innovative projects. It was developed by Gavin Wood, one of the co-founders of Ethereum and the creator of Solidity. Polkadot aims to build an internet where users have full control over their data and their applications. Polkadot offers tons of unique features, a shared security model, along with the new auction model and significant implementations like ASIC banking. Given these characteristics, it's easy to understand why Polkadot is gaining more and more traction in the cryptocurrency world. Some people even are talking about it as the AWS of Web3. Now, companies such as Mythical Games, Aster Network, and over 50 other independent blockchains with hundreds of applications already leverage Polkadot's technology to power their platforms. If you're looking for a reliable, scalable, and cutting-edge solution, Polkadot seems to be the top choice for industry players. Go check them out today at polkadot.com.
So Wall Street has two major issues, to make this clear to people who don't follow hedge funds that closely. So they actually have two different groups which force them in times like this to be not taking risk. Number one is they're investors. So some of the hedge funds do have longer term lockups, the bigger ones, but most of them, they've got quarterly liquidity, sometimes monthly liquidity. So if they post it down 20% and their investors pull their money, they're losing money that way. The other side is almost all hedge funds use leverage. So that means they borrowed money. So they're the people that they borrowed money from, which are the prime brokers. If they hit a drawdown of some magnitude, they start changing the margin requirements and they start asking for cash. So Wall Street actually has an embedded side there that prevents them from going through it. Plus, they're paid on performance in a formula. Retail, just like in the crypto world, they can buy, oh, it went down more, okay, I'll buy a little more. And that is a mentality that has proven to work because the stock market, as I wrote in this, it makes new highs fairly often. I mean, it's up 80+% of the years. So maybe that'll change. Maybe the next 10-year stock market won't be up. Retail has seen that this seems to be a rigged game. And if I'm going to be debased, my advantage is when things get really bad and I know you're going to print again, I need to be buying more. And so I think that's what retail just realizes. It's worked for them for a long time. And they trade kind of like the crypto people do. It reminds me of that. And I think they're the same people. So when we talk about retail, the 0-date options that are traded, those are not baby boomers. They're not trading 0-date options. This is a trading world. This is a gambling world. As I talked about, there's more money in personal consumption expenditures on gambling in this country right now than new cars purchased. So this is a different world than it was 15 years ago, 20 years ago. So I think retail is going to continue to be there to buy. They'll sell some days and then they'll turn right back in and start buying again.
When we look at U.S.-China relations, it feels like Trump can't back down because his base will not be excited. President Xi can't back down because he'll lose face in China. You have two men who their entire thing is strength, posturing, abrasiveness towards each other to a degree. Who blinks first? Or how do we get past the impasse? Is there a third party that shows up and says, okay, children, let me figure out, you two countries that don't seem to be able to get along, I'll play referee? Is there some showdown? We get a photo op. I think the last time that Trump was in a room with President Xi, he told the photographer, get our good side so we look thin. What do you expect to happen here?
So let's use an analogy. You either believe China and the U.S. are married, separated, or divorced.
Okay.
I would say at this point they're divorced. All right. So the reason they have to still get together is because they still have kids together. Meaning there's no way to separate globalization. So if you believe I believe in national capitalism now, not global capitalism, which is what we're going through. Every country is going to focus on their own domestic situation. So divorced parents eventually have to deal together. You don't know what's going on behind the scenes, but they eventually have to deal with it for the betterment of the kids. And that's what I believe is going to happen. I don't think either one of them is going to give in, but I think somehow within there, they'll both be able to claim victory on their own to their, nationalistic
That almost
side.
feels like that's the point.
Yeah.
Right? Is if you can claim victory, even if you don't win, the claiming of the victory is more important than the winning. Because, in a weird way, like the administration, they did drop the tariffs. They did go to the pause. But they sure came out and they were like, we're winning.
Yeah.
Right. And so I'm going to give away one of their secrets. There's a documentary. Excuse me. It's a fictionalized documentary, but it's called The Apprentice. Highly suggest everyone go watch this. It is about Roy Cohen, who was a lawyer in New York City, who was the mentor to Donald Trump. And so Trump's in it.
Yep.
But he has 3 rules. Only 2 of them I remember. The first one is attack, attack, attack. And number 2 is always claim victory. And having watched that,
yep.
I was like, oh, everyone's going back and like reading the Art of the Deal. They're trying to like get in this guy's head and figure it out, whatever. That movie literally was the last 4 months or 4 weeks.
Yeah. I think we're on the same page then. And for everyone watching, listening, unfortunately, there's at this point with how bad the situation's gotten, it either ends with no deal but tons of printing by every country in the world. Because when you go nationalist and you don't depend on globalism, then what the US is forcing every country to do is to have a bigger fiscal deficit. So we have a fiscal deficit, we have a debt to GDP problem, and we have a trade deficit. So we're just spreading this around the globe and saying, fine, if we're going to have a trade deficit, you guys are all going to have fiscal deficits because trade's going to slow down and we can't have a depression. So we're just going to print money. I think it's a combination of all of that. And I think China and the US have to come to some kind of an agreement that is basically aligning themselves that over the next 5 years, this is what's going to happen. One of the most interesting things about this week so far is that you have a debate from people, including I've noticed a bunch of people in the crypto world are talking about, well, when China devalues, this is huge for China hasn't devalued. And I think this is the interesting point in the plan. You have the dollar weakening, but not against China. And I think it's because where China's situation is, remember, it was only 6 months ago that everyone in the world was worried that they couldn't get out of their deflation problem. They were doing some stuff in September of last year and you had Tepper on TV saying, buy all China, and then everyone's fading it. So we've kind of forgotten that China has a debt deflation situation, and a lot of their debt, unfortunately for them, is in dollars. So you end up, especially in the property sector, so you end up in a situation where I think this is why the US is pressing so hard, because they think China's on the weak side. China's saying we have other things on the other side, which they do about us. I think eventually it just comes to a meeting and they both claim victory. When
we think about that global capital stack, if you get more of fragmentation, you get kind of domestic focus, can Bitcoin become the thing that people use for bilateral trade?
I mean, there's already,
like, I don't want your yuan or pesos or whatever, right? Like, let's just use the third party thing that no one controls.
And I think it'll be happening more and more. I think there's already unconfirmed stories that it is happening. I do think it's going to happen. I think it'll be gradual. Again, I said it last week. I'll say it again. This is the year for me, regardless of what's happened right now, of the network effects for the digital economy. And if anything, what this last 3 weeks have shown the globe, you better be coming up with a new way to exchange things in something that everybody believes in. This is the other part about the reserve currency. Commodities are settled in dollars. Like all of these things have to change. If people don't trust the US dollar, and it's falling right now with bonds going and stocks going, this is an emerging market problem. You don't see this type of stuff. This is the kind of thing that it accelerates and it goes. I don't know if the market falls again today, and we're doing this in the morning of Friday. If it falls again today and we're down another 10%, there'll have to be conversations over the weekend about how are we going to stop this from happening, and it will involve the Fed. We're that close to kind of the need to slow this process down, because when you get to this point, Bitcoin is benefiting, and I'll just say it to everyone again, do not look for Bitcoin to go up at times like this. Gold makes sense to me because it is the accepted bigger asset by the globe. This is the new kid in town. The new kid in town should just be outperforming the fiat system, which it's obviously doing versus all currencies, but in particular versus the dollar right now. Global liquidity is going up because the debt of the world is predominantly in dollars. So global debt is getting better. Liquidity measures are all going through the roof.
And Bitcoin will be 4 to 8 weeks, 4 to 10 weeks later.
And that's what I think it will be, is you'll look back 8 weeks and you'll have regretted when it was at 82 and you're like, oh my God, I can't believe I didn't see they were going to print to stop this thing. They do it every single time. And now it's at 120 and I didn't get in.
What do you think it will take for the AI conversation to start to enter into this economic stuff? And the reason I say that is we know that inflation is coming down. We know AI is a deflationary technology. We know that there's a lot of capital being invested there. It feels like that's a very real trend. It's not hype. These technologies are being used on a day-to-day basis. People realize it's going to be a part of their workflows. But I don't hear a lot of people right now talking about that as having an impact in the trade wars and stuff. And part of maybe where I get the most interested is I've been talking to a lot of people about manufacturing and industrial businesses. And I think that the general view is that all of the manufacturing that happens outside the United States is sweatshops with people like, hunched over, literally sewing a t-shirt together.
Yep.
And in the United States, we don't make anything, which both are untrue. In the US, we make a lot of stuff.
Yep.
Everything from reusable rockets, pharmaceuticals, and everything in between. But also these factories in other places are technology factories. And so humanoid robots and AI and all this stuff feels like that's the battleground. Like I said to a friend, I actually don't think this is a trade war. I think it's a technology war between the US and China moving forward. Do you agree with that?
To some degree, I do. Again, this fits in with the race towards AGI, towards quantum computing, and towards this whole thing. If you can basically make everything for next to zero, then you can sell it around the globe. And this is one of the things, I don't know if we talked about it last week or not, but one of the scary propositions on the AI side that people don't talk about that much, which again fits back into the blockchain. If China wanted to tomorrow, now again, what happened this week was an attempt to put a blockade around China. So if Donald Trump is successful and everyone would be like, I don't want to deal with China, I'd rather deal with the US. Okay, well, he kind of put everybody in that position. But the reality is, if China wanted to say, hey, all your Windows, we just replicated it and we're selling it for $5 as opposed to, what we all have to pay for it. AI allows you to copy everything. They copied OpenAI and they went through, like, everything now with AI allows you to copy everything. So it's not just deep fakes, it's the fact that all code is now vulnerable to AI. So embedded in there is absolutely an acknowledgement between the two countries on this IP side that we're pissed about the IP side. China gets to use and say, oh, you don't like it now? There's rules now. If there's no more WTO and there's no more rules, then the whole IP thing is gone. So we'll just copy everything you have. So embedded in there is absolutely a technology war. There's no question. Plus you have the Taiwan situation, which makes 90% of all the advanced chips that are necessary for everything, which obviously they're sitting right out. So there's no doubt it is part of this. The AI thing from an investment standpoint fits in the exact same conversation as Bitcoin. To invest in AI right now, you have to believe there's a future in the economy. There's no future in the economy when the VIX is at 50 and treasury yields are going up. So right now, no one's really focused on talking about the future, but there's AI advancements every week. And if you just go in this week, when I'm doing my YouTube video tomorrow, I already have 7 slides on what was announced in China and the US on AI advancements this week. Nobody cares about it right now.
Before I let you go, give me hope. Give me the light at the end of the tunnel. What is the best case scenario from where we are? What is the thing that you're excited about, or you're saying all the fear, all the concern, all the chaos and uncertainty, calm down. Here's a path. Everyone follow me. Let's go down this path.
The best thing I can tell you, and this has been proven over my entire 30-year career.
How do you have 30-year career if you're only 21? That's crazy. Go ahead. Keep going.
Crisis is the only thing that brings government to realize that they have to do something. So when you're in a battle, the only thing that brings people to the table is a crisis. And this week has entered the crisis world for, I think, the entire world. It's very obvious that the dollar falling, stocks falling, and yields going higher or bonds falling in what has been the safest investment in the world, and where a lot of investors have their money. Foreign investors own 30-40% of corporate bonds. If they sold all their corporate bonds, guess what? A lot of businesses are going out unless the Fed comes in and they do what they did in 2020 and they agree to buy credit. So on the one side is you need a crisis to get everyone to kind of come together to talk about it. I prefer this one because it's more controllable if the end result is everyone working together. And that's what a crisis does. I don't think they're coming out of this as friends. I don't think this is coming out. I think the global order has been reset. We're just pushing everyone into it. And that's why I said last week, when stocks fall 10% in 2 days, and you go back and look, that since World War II, that's only happened 4 times. And each one of those is in the history books, meaning the Great Financial Crisis, COVID, and 1987. We're kind of at that point. So I think that's the hope, is that the crisis will bring everyone together.
And in that crisis, who are the important players to pay attention to? Because one of the things I think I've noticed, there's a lot of people going on TV talking from the administration. To me, it feels like Trump has been talking with an eye towards the negotiations. Bessent has been talking with an eye towards the market, which isn't surprising. Yep. But one, is that true? And then two, is there anybody else that you're really paying attention to? You're like, this is where the signal is?
So until Monday, and the reason I wrote what I wrote on Monday is there was a political story that came out. That's become more of a national story now, and Wall Street Journal covered it as well, that Bessent flew to Mar-a-Lago on Sunday. The reason that was important to me is because the markets had become dysfunctional. When you have 10% in 2 days, you're at a different story. We're more dysfunctional today, even though the stock market is up for the week as we sit here, and that's because bond yields are higher. So I wrote in my Substack that Bessent is obviously getting talked to from Bill Ackman, from Druckenmiller. Druckenmiller tweeted for the 5th time in his life. Like, we're at a stage where Bessent, who knows all these people, they're like, this is blowing up. What is the plan at this point? So at the same time that Bessent kind of obviously is moving up, we're hearing less from Navarro and less from Howard Lutnick.
Are you saying that there was so much economic pain that we forced Druck to tweet?
Yeah. I think you kind of started that too, because I retweeted you putting his interview, which was a great interview. And all of a sudden he had to put something out there because people were like, I don't agree with more than 10% tariff. So yes, it took a while to get him out there, but that means we're at a crisis situation. And I mean, this starts to get funny to me because when you see Navarro and Lutnick go down, Elon Musk and Navarro are in a fight on X.
Well, they call him Peter Retardio, right? Is that that's the name, right? So,
and it started
and
over
then
the
car
weekend.
Assembler. I mean, one thing that I do think is actually people are going to focus on the exact situation, whatever. Here is one thing that I took away from that. The terminally online people are way better at the shit talking on the internet, obviously, than the people who aren't.
Yep.
And so there's holding back of Navarro was he's a car assembler or whatever. He's taking a shot, but he's doing it a politically appropriate way. Yep. You can't fight with a man who is the wealthiest guy in the world and he's still willing to call you Peter Retardio, right? It's over. There is no competition there. And I kind of feel like that is the same thing that's happening on a global scale where we're just now willing to say things or do things that maybe previous presidents, they would have gotten towards the same thing, but they would have said it in a different way.
Yep.
But Trump will just bluntly say something and it kind of cuts to the heart. And it feels like other world leaders are like, oh, I can't play that game. That's not my style. That's not how I do that. You know what I mean? It's a very interesting dynamic. The communication style is so advantageous to America, even though a lot of Americans don't like it.
Yep.
Because it basically undercuts, what other people are willing to do.
Yeah, and that's why I made a reference to The Joker by Heath Ledger with a line in there about, I think to actually get to this point this quickly, it needs to be crazy. I don't think if you want to get this done in as short amount of time as they do, I think the only way to do this is to make it as crazy as possible. So when Elon Musk, who's part of the is tweeting against Peter Navarro, and it starts on Sunday and it just escalates. And I'm sure a lot of people watching this was that going on behind the scenes? They're not paying attention because stocks are down, everything's falling. There's definitely chaos that's been there, but I think the chaos will get us to the point where it brings the crisis to a head much faster.
Caroline Levitt had my favorite quote. I now start doing quote of the week, like in my head. And my quote of the week was not the Peter Retardio or any of this stuff, right? It was Caroline Levitt was asked in the press briefing or whatever, did you see this happen? What do you think? Are you, the advisors to the president are fighting? And she very quickly shot back and said, boys will be boys, and we will let them fight it out. And I was like, oh, okay, this is this is a show, right? And the directors of the show have displayed it for all of us, and we can't look away. It is a slow car crash that we can't look away from.
Have you seen the movie Miracle about the
ice hockey? Yeah.
If you remember in the very early stages, and whether this actually happened or not, to settle old scores between the Boston kids and the Minnesota kids, they got into a fight, and Herb Brooks let them fight it out. That's kind of what she was saying there is, let's just, to get to the end, let them fight, let them go through this. This is all part of the process, and we'll be stronger coming out of this. And that's what I'll say as an optimistic note is the system has to change. When you change anything in life, it is not easy, whether it's a job, whether it's a relationship, anything. This is not going to be fun, but we do have a printing press, which allows us to go on. What everyone needs to remember is from an investment standpoint, the second that the Fed does anything to help the bond market, which has to come because it can't get disorderly. It hurts everything. And Trump doesn't want that. It's going to lead to the beginning of the new system. And whether it bottoms that day or in a week, we're getting closer to that day every single day.
I couldn't agree more. Where can we send people to read what you're putting out and also watch on YouTube?
Look for me under VisserLabs at all places you can find, but definitely the Substack thing has been growing, and YouTube every Saturday I put something together and I put it out on Sunday. And if you're trying to learn about the specifics other than listening to us here, I try to give you actually where you can go find the written work and everything else. So.
I think it's excellent. Thank you for putting it together. And we'll do this again next week.
Thanks, Anthony.